Hi, thank you for joining me here with Money Mastery for Dee Dee live at noon. Today's topic is the tax bill that President Trump just signed. Unless you've been living under a rock, you know that the tax bill was proposed before Christmas. It languished for a week, but it has been now signed into law. And in this new bill is stimulus, there's tax rule changes, there's all sorts of things going on. And I wanted today to give you a brief rundown of the highlights that I think are important to you. The first, of course, being the $600 per person stimulus checks that are due to be issued. These are basically going to be issued based on the same criteria as the $1,200 stimulus checks earlier in the year. If you qualified before, you'll likely qualify again. Maybe during the year you slid into qualification and you'll get it. If you don't get the check, don't worry, that can be trued up come tax time. I know that probably isn't what you want to hear. You probably need the money. Everybody who's getting these, I'm absolutely sure can put this money to good use. But remember, it is an advance on a refundable tax credit. So that's a fancy way of saying come tax time, the IRS is going to true this up. If you were somebody that actually got an extra check, hopefully you've returned it. If you did happen to cash it, again, that's going to get trued up at tax time. So it's going to be an interesting tax year for most tax filers. One way or another, there's going to be some extra things on there to account for the stimulus checks that they may or may not have yet received. So just that's the headline for most citizens. A few other things I want to mention now. If you're a small business owner and you had a PPP loan, they have established that expenses paid for with your PPP loan proceeds are in fact deductible. That was the implication in the original law. The IRS came in and said, oh, no, that was free money. You shouldn't be able to deduct expenses against money that you're not going to be taxed on. And the legislator said, we wrote that the way we wrote it because we intended to. What this means, let me see if I can make this kind of simple. If you got a PPP loan for 10 grand, nice small number, and you paid 10 grand in expenses, so you qualify for the forgiveness on the loan, you don't have to pay tax on the $10,000 under any scenario. The IRS said those expenses that you sent out the door, paid for wages or rent, are not deductible. The legislator said, that's not what we meant. We want them to be deductible. So what you're getting is the 10 grand in basically free money plus the ability to deduct that 10 grand that you spent. So you get an additional benefit of, depending on your tax bracket, 20 or 30% of that. So another $2,000 or $3,000. So your PPP loan of 10 grand also came with a tax benefit of $2,000 or $3,000 on top of it. So good news for small business owners. You might recall that for 2020, there's an additional charitable contribution deduction that everyone can make above the line, everyone who does not itemize. Whether you're single or married, you can deduct a $300 cash donation above the line on your 2020 tax return. Now, clear example of a marriage penalty, because it didn't matter if you were married or single, you were limited to the $300 for 2021. This has been extended, and married couples can actually deduct $600. So that is been put into place. Let's see some more. You probably heard about the return of the 3 martini lunch. Lunches and meals are now fully 100% expensable. The idea is to try and help out restaurant workers. We'll see how that works. I'm not ready to eat in a restaurant yet, so it might not have immediate impact, but other folks are good with that. There's going to be some enhancements to the child tax credit and earned income tax credit for low-income taxpayers, which will make it easier to establish eligibility for that program. They went through, and if you're a tax person, you follow these things. Every year at the end of the year, there's bunches of tax provisions that are due to expire. And I guess it's because Congress really likes a lot of drama. They wait till the last minute to try and extend these. And frequently, they're just extended for a year, and it has to do with how the accounting at the federal level works. But it makes for a lot of uncertainty for people who depend on those particular tax rules. In the latest bill, they've extended many of those to coincide with the expiration of the Tax Cut and Jobs Act in 2025. So that's nice. One of those in particular relates to the federal aid for higher education. They're getting rid of the above the line deduction and have made more favorable the qualification for the credits. So that one's pretty good. If you're an educator, you can take an above the line deduction for COVID related expenses. If you're buying PPP or other items like that for your classroom, that deduction has been extended to cover those kinds of costs. They've clarified what's going on with forgiveness of economic injury disaster loans, EIDL loans, that they are excluded from income if you're a small business that got one of those. They've extended the pay for sick and family leave that's called Families First Coronavirus Response Act. They've extended that through March 31st. So again, a lot of stuff for employers to know about, employees to know that you may be eligible for this coverage. There's even an employee retention credit that's extended through June 30. And if you were part of the Social Security tax deferral, they've extended the deferral all the way through the end to 2021. These are big deals. One other big deal I'll mention before we close, because this is really a dry topic today, but lots of interesting, juicy stuff if you're a tax or a financial planner person. The PPP loans, they have opened up the door to more money for round one, because when that expired, there was still money left. People had not gone in and gotten those loans. Additionally, if you were somebody who has already received a PPP loan, there is a round two available to you. Little tighter criteria. You have to have a demonstrated drop in revenue. If you happen to work in food service or hotels, they've expanded how much you can get from 2.5 months of wages to 3.5 months. So they're favoring certain industries that really, really have been battered. So lots of things going on. The big question is timing. When will the stimulus checks go out? When will the PPP money be available? All of that stuff is up in the air. Having the signing of this bill be delayed by a week has really thrown things into more of a turmoil than it would have been even just happening at the end of the year. So always some fun tax drama at the end of the year, as usual. If you've got questions, reach out to us. We will help you. We are here to help you, and we love to help you. This has been Dee Dee Jones with Innovative Financial, helping you get mastery over your money. Have a great day.